Good morning, everybody. Mike Vacchi, Princetontrader here from Mr. Topstep with your Thursday morning pre-market webcast. Okay, so a couple minutes ago, we just had initial jobless claims. It's the highest claim number in the last 3 months. It's definitely a miss. It was 388,000 versus 365,000 expected. So we're seeing a little bit of a pullback, pulled back as low as 53.25. So, we'll have to see. I mean, the dip buyers are everywhere. I'm not going to get too excited about what's happening at 8:32 for an 8:30 economic release. What I am going to be looking at today are the 10 o'clock numbers, which are leading indicators and Philly Fed. If Philly Fed is a disappointment, you may really see a little bit of a pullback today, at least in the morning. The flip side of that is if Philly Fed is a beat. I think that's the dip buyers love to run in on these reports, whether it's Empire or Philly, and move things up. That and consumer confidence is what really lately economically. Setting aside the jobs report, what really moves the market lately. So here's your daily chart. 1420s on Friday, went down and did the 16 halves Sunday night. We've been rallying ever since. We have gone from 1416 half up to 1458.25. Now, that's 42 handles straight up off the bottom. You want to buy them? Don't do it with my money. What we could do here is another look at the upper band, which is 63. Okay? So if you're a day trader and we get a dip buy today, and maybe the dip is right here at 53.25. If we do that, we get a move up to 63. But that's probably all we get. Maybe a little bit of an overshoot to 66 to do a double top. But, the market is trading within the bands. And it is far too uncertain right now to trade much higher than that. There's talk of 1475. There's talk of 1500, 1515. We have a very big election in 3 weeks. And what seems like the more likely scenario to me is that we begin to make a series of lower highs and higher lows. And we start to wedge into the election, which is the classic uncertainty. And more likely than not, those patterns, those wedge patterns, tend to spill lower. Now, that would indicate a reelect, which a lot of people I think are starting to really consider as a reality because the swing state polls aren't moving. But if everybody out there is short because they assume the president gets reelected, it is only going to take one little thing to spook everybody and rally the market higher. So I would be very careful really leaning hard short into the election. Just be careful. It's like a head and shoulders pattern that everybody sees. Those always tend to go in the other direction. Let's look at tighter chart. Okay. $15-minute chart. You see the dump there. We're making new lows, 52.75. So where do we pull back to? 51.50 has been important. 48 has been important. You've got double pivots down here at 14.46 half. All of those are plausible. The 46 area was a support area on Globex Wednesday night, or early Wednesday morning, I should say. So we'll have to see. The reality, though, is, and let me back this chart out one. Don't worry about what these numbers are. Just know there's a lot of them. From 1451 to 1437, there is a truckload of wood to chop in that area. So as we're pulling back, if you don't see Wile E. Coyote off a cliff, that's why. Because there's just a ton of support underneath from various fib levels, pivot levels, and other key areas that people look at. Okay, so be aware out there. If you want to buy it, have a plan. Either way, long or short, stick to your risk. All right. Have a fantastic day. Mike Vacchi, Princeton Trader for Mr. Topstep. I'll be back tomorrow morning with another webcast. Trade them well, everybody.